Thank you, Valdemar. Good morning and welcome, everybody. My name's Dean Carrigan. I'm a partner at Clyde & Co. We're a global law firm. I'll be moderating this morning. At the end of the table, we have Patrick Beckett. He is a Queensland manager of Willis Towers Watson. WTW are a global risk consultancy organisation. David Gallagher is representing Liability international underwriters. They are insurers, and David has been very, very heavily engaged and involved in rolling out cyber policies, solutions to help organisations manage, mitigate their risk and indeed respond to cyber breaches and incidents when they arise. Next to me is my partner, Matthew Pokarier. We've got two lawyers on the panel this morning. So we've got a lawyer, an insurer, and a risk consultant. We promise not to be too doom-laden, but there will be some positive things coming away from this discussion. Matthew, in particular, has been doing a lot of work and has a great deal of experience in privacy and cyber-related matters. As Valdemar said, please feel free to raise questions on the way through if you have them. We'll try and save a bit of time at the end if people have questions at the end. But really, just to set the scene, the cyber market in Australia has really taken off over the course of the last 12 to 18 months, principally because of the change in legislation at the beginning of this year, February, the change to mandatory data breach notification requirements in our privacy legislation. That's been coming for a long time, but that has very much been, I think, a focus, a catalyst for debate, discussion, and also, I guess, a prompt for organisations to focus more closely than was the case previously in relation to the need to be prepared for, to be able to respond to data breach incidents without going into the detail of the legislation too much. It is novel legislation. It does require organisations where there has been a significant data breach to notify both the subjects of the data breach, that is the individuals whose information has been lost, has been stolen, or has otherwise been misused, as well as to notify our Australian Privacy Commissioner, the Office of the Australian Information Commissioner. So the net result of that is obviously to shine a real spotlight on data breaches, give rise to exposure in terms of legal liability, regulatory investigations, and of course reputational liability to those organisations, which prior to February this year could really have sailed under the radar in relation to breaches that have occurred. So that's been a real catalyst. And of course, against the backdrop of the change in the regulatory regime, there is an increasing prevalence of data breaches arising from attacks, cyber attacks, simple human error, data being lost, and we're not just talking about digital data here, we're talking about information in any form, whether hard copy, written, or indeed any other form. If that is lost, stolen, or misused, then that could, depending on the circumstances, give rise to a data breach, could be notifiable. I think another catalyst driving all of this is the regulatory focus from our peak regulators here in Australia. ASIC, our general corporate and consumer regulator, and APRA, in the context of the financial services sector, have been very, very clear in public communications that they expect the boards, the senior management of organisations at whatever level, whatever size within Australia, to be aware of, to take responsibility and be very proactive in driving change within organisations to equip those organisations to be cyber resilient. So I guess the fear at senior management and executive level within organisations to do the right thing and be seen to do the right thing has also really driven behaviour, and we're seeing a real uptake in relation to insurance solutions and insurance coverage for data breach exposure. We'll talk about that in a bit more detail, but I think just on the theme of resilience, it's clear to me as a lawyer that although insurance isn't necessarily going to prevent data breaches, it is very, very much a useful, in some cases critical, solution in relation to fixing problems, in enabling organisations to have solutions and responses to coordinate a response to a data breach when that happens. And we'll talk about the solutions, the functionality of the products, and how these insurance products can actually assist organisations when they do face data breaches and have to respond to those. So, just to turn to some of the issues, I've touched on it already, but Patrick and David, if you could just briefly cover off some of the main types of cover that are provided in cyber insurance policies.
Yeah, brilliant. Thanks, Dean. We might just flick to the next slide. And just to probably cover off again the point that Dean made, given the theme of the conference of resilience, I think it's a strong contention that we'll make today that's right. Insurance is something that kicks in once those front-end kind of mitigations fail. That's the part insurance plays, and it can play a very significant role for any sized or any type of entity in building organisational resilience. So we'll go through a bit now about what a cyber policy does cover and the benefits it would confer on an insured, be those insured persons or an insured organisation. And insurers and the insurance industry breaks it down generally into kind of two areas, what we call first-party costs and third-party costs. Simply, what that means, first-party costs are those which would be borne directly by the organisation in trying to fix or remedy a situation, whether that be a data breach or internal systems down or systems down of potentially a service provider. The second part is third-party costs, or you can think of those more as liabilities, I guess, and that might be those costs which another or third party, funnily enough, seeks to recompense from you for losses they may have suffered. So, should you lose someone's data, potentially, you may have claims from those third parties, you may have claims from customers and other people who are aligned on your services, or those you've given some kind of express either contractual guarantee or implied guarantee that you would keep safe their confidential information or material. So that's generally how it's classified by insurers and under an insurance policy. If you've got the clicker there, those first-party costs is really the area we've seen drive kind of increase the sale of insurance policies, because this is the real benefit that insureds feel that they're getting from a policy. So what this allows, generally, if you have a breach that becomes too significant for you to deal with internally, so we're talking about relatively severe events, you get or may have the benefit of an extensive list of vendors from a number of different fields, and this has been kind of again talked about at many stages through the conference. To be able to move from your what would be your internal capabilities and bring in some of these experts, I think plays exactly into that resilience element, in that having the benefit of these firms, whether they're legal, forensic, whatever it may be, will most likely help your firm bounce back to where it was, to a business as usual position, much swifter than it could have on its own merits.
Thanks, Patrick. Could we just go back to the previous slide? just wanted to point out on that right-hand column there, we've listed a range of third-party losses there. So cyber insurance policies will typically have quite extensive cover in this area. And the two big things on that list that stand out to me are really the privacy and security liability cover, and also the claims arising from network security failures. There's some other things on that list there, and you sort of think, what have they got to do with cyber insurance or security-related issues like defamation, for example, or infringement of copyright? Really, I think those things were really added into cyber insurance policies to kind of beef up the cover a little bit and provide a little bit of extra, and that typically is kind of spread across a number of competitors in the industry. So, yeah, looking at privacy and security liability, Patrick's already touched on that, but really you think most organisations, pretty much everyone now, will store some type of personally identifiable information, or PII, at minimum the PII of employees of the company, but that could extend out a lot further than that, where tech companies, for example, will often have extensive databases with PII. Sometimes their customers or third-party PII will be stored en masse in these databases. That's a huge risk if that data gets out there in the public domain or into the hands of third parties who shouldn't be able to access that data. And we've had many examples of that almost daily around the globe, and including in Australia. And you know, the Red Cross Blood Service was one example that's been mentioned here at the conference this year and the previous year. There's no shortage of examples of that occurring. But also, in addition to PII, there's confidential information. So that could be confidential corporate information, it could be trade secrets, other intellectual property. Can you insure the value of intellectual property is a question we'll get to, I think, later in the discussion. But really, that's the crux, the third-party liability cover. But also the failure of, say you're a third-party provider to your customer, you might be providing some IT services of some sort. If your network were to fail, that could have a serious impact on your customers. Not all cyber insurance policies cover that failure to supply type exposure, so you need to really get down into the words. Insurers refer to those triggers sometimes as wrongful acts, so you need to read the specific words within the insurance policies to see whether that's covered. If it's not, you might want to negotiate that cover in. Of course, you use a broker in that process. So that's a brief overview.
Thanks, gents. So we've seen that there are definite benefits in terms of having cover tailored and fashioned for particular exposures and risks that arise in the cyber context. If you use a cyber policy as compared to a standard liability policy or a standard property policy. If you flip that over, though, what are some of the common items that are not covered by an average, and I say average because there is no such thing as a standard cyber policy in Australia or indeed elsewhere, but what are the sort of things, David, that aren't generally covered?
Okay, since I just mentioned intellectual property, if a company had their intellectual property stolen, that's a form of data. Those losses wouldn't be recoverable generally under cyber insurance policies. You'd really have to negotiate some cover there. And I've looked at instances where that's happened. It's a little bit of a complicated process to put a value on IP. We'd typically look for that IP to be valued by a third party, say one of the big accounting firms, for example, and make an assessment around that. So a complicated area to underwrite and assess, but it's possible. Cyber insurance policies don't always cover personal injury or property damage losses. So that's an area that's kind of developing currently, and there are covers being negotiated in, sometimes sublimits. If you look at broader insurance programs, there might be cover elsewhere in the program. So as an underwriter, I would take that into account and factor in what cover already exists. The broker might be aiming to fill in that gap within the cyber insurance policy, as opposed to building up a property program or adding the cover in there where it doesn't exist. But there's certain other things that really stand out. You think failure of telcos or utility providers, such as the electricity providers, satellite failure, those type of things. Generally, there are exclusions in cyber policies for those. We refer to them as systemic exposures from an insurance company's point of view. It would be an absolute disaster if we gave cover and, say, Telstra went out and affected 75% of our cyber insurance portfolio. It would potentially blow up our insurance company. So we need to control that exposure. What we do cover, though, is things generally inside our insured's control. So you think there's a failure in the electricity supply, doesn't trigger the policy, but if the failure occurs within the insured's power board and within their hardware or their systems, then yes, potentially that could trigger the policy. There's a few other things. If you go through exclusions, you can see some fairly standard things in there. War and terrorism is another big one to point out. Policies these days do provide right-backs for cyber terrorism, so actions of hacktivists, sometimes state-sponsored threats and that type of thing. But again, you've got to get down to the words in the policy and get some advice around that, because there's a great deal of variation in the wordings out there.
Yeah, we probably shouldn't let the underwriter talk about the exclusions on the policy. They're the only ones that get excited about that, and it could be here all day. But I think two things to point out quite quickly is that I think there's almost a bit of a misnomer, especially at the moment. That's right. There are no standard insurance policies in the market at the moment, but at the top end, for the majority of quality insurers who are providing a cyber insurance product, they do provide largely the same thing, largely the same covers. They are written in different ways in certain parts, and you should take advice about that. But I have confidence in most of the products in the market that they're there and are written appropriately. I think there's more difference, and what you should be asking in many cases is, okay, well, what has this insurer done previously? What's their experience in this field, and what have they been like in paying claims previously? I think there's a lot of people pushing into this market, putting their hand up, and a lot of wordings are cut and pasted. This is how the insurance market works. They tend to borrow good ideas and bad ideas from each other quite frequently. So the coverage is largely there. I think there's a few other questions if you're assessing an insurer that could be asked. The other thing that generally a number of clients sometimes get a bit confused about that isn't covered by a cyber policy is direct financial loss. So that's money that you lose. We've heard a few examples throughout the conference about kind of payment instruction fraud and that type of thing. If you're sent a dodgy invoice and you pay out to someone you weren't meant to, $1 million, $10 million, whatever it is, that loss of money would not be covered under a cyber policy. You would need a specific crime policy. So a lot of clients think, well, I lost money due to some kind of nefarious computer act. That must be covered under the cyber policy, but no, that's a kind of common pitfall. Make sure that your crime policy is up to date as well.
Okay, thanks, Jens. We've seen from the work that we've done that it's almost impossible to ensure that an organisation, whatever its size, is never going to experience a data breach. Even the best run, best governed, most resilient organisations with very, very strong organisational capability and systems and processes are subject to these exposures. In that situation, when things do go wrong and an organisation finds themselves having, under the new legislation, to notify the data breach, Matthew, what are the main legal issues that organisations and businesses need to be considering at that point in time?
Yeah, I think the role of a lawyer in responding to to a cyber breach is a bit more nuanced than it often is in legal experience. Lawyers are often brought in initially as a breach response coordinator, effectively, which is a little outside of the normal legal process, where we assist an insured in the vendors they need to solve their problems, whether they're forensic, whether they're in credit monitoring, or whether it's in PR. It's in a number of areas. The other aspect of what we do in that is more purely legal, and it really focuses probably more on the sort of third-party claims in the regulatory environment. One of the first things we would need to do is assess the nature of the insured and the organisation involved and where it fits within a fairly complex regulatory structure. Some of you I recognise from a workshop we ran earlier in the conference where we looked quite specifically at the legislation that applied at a state level, at a federal level, and also globally, that can impact an organisation when they suffer a data breach and potential loss of their clients' data. That's one of the first things we would look at, what obligations arise in the course of responding to those regulatory obligations. The very fact of a data breach and the need to notify could result in the regulator launching an investigation into the organisation and having a look at its compliance with privacy principles. And of course, organisations can be exposed to third-party claims, even potentially a class action if, for example, a lot of medical data or other data was lost and a class could be formed. In that particular environment, obviously, the engagement of a lawyer at an early stage helps to provide the shield of privilege, should it later become a litigated issue. So it's really in that broad range of areas we'd be involved.
Thanks, Matthew. And the experience is that getting that right, that response to the breach and the loss of data, getting it right early is absolutely critical in terms of making sure that a bad situation doesn't run away with an organisation and become a whole lot worse. And that's where really some of the functionality and the provisions of the insurance policies, the ability to deploy teams to assist the insureds organisations manage through those difficult situations is a key and very important part of the cyber policy cover that's available. Let's look a little bit forward now in terms of how things are developing. It is still a developing market in Australia for cyber cover. There are no standard wordings. There's no standard terms and conditions. Maybe I'll pose this one to you, David. What sort of expansion in the cover, the benefits to insureds are starting to emerge in the local Australian cyber insurance market?
Okay, that's a great question because this whole area of innovation in cyber insurance policies is really driven by, it's competition. There are a lot of insurers out there now. They're all trying to differentiate themselves and come up with different extensions and add-ons to the cover by endorsement and so on. One of the big areas I'd point to is reputational harm cover. And what people usually think about reputational harm, it's spending, it's PR costs and those type of things once a breach has occurred or some type of cyber incident. But true reputational harm cover, it's a lot more meaty than that. It's actually measuring the lost business an organisation has suffered as a result of a cyber event. And how do you do that? Well, there's a bit of forensics involved in measuring the loss of income and in particular the net income or profit as a result of a certain cyber event occurring. So you can do that by looking at financials for the previous 12 months, the projections an organisation had, and then working out where the dip occurred after the network outage or privacy breach or other cyber event occurred. So you need to get down into the nitty-gritty and look at the financial results. Sometimes it can be quite tricky if you're dealing with an organisation that has thousands of customers. You may need to measure that dip over time, and you might have 3 or 4% impairment to that net profit. Where you're dealing with organisations that have certain key clients, maybe 3, maybe one of those leaves throughout the year as a result of the cyber event. They lose trust, they lose faith in the organisation and decide they're going to go elsewhere. And it may be very obvious in those cases what the reason was for them leaving. So that's one area. There's a lot of activity. Failure to supply is another one. I can think of, say, an electricity grid. They may have certain key customers, that BHP and others, for example, that rely on them for their industrial processes. So if the electricity grid were responsible for an outage, there may be contractual terms where there may need to be some type of reimbursement. So Do cyber policies provide this cover as standard? Absolutely not. That's an area that is developing, I think. Patrick already mentioned and touched on crime and social engineering. So crime is really, traditional crime policies cover stolen funds or misdirected funds sometimes, and money. So cyber policies have really focused on data and the cost of reconstituting data that's been damaged or deleted. They haven't really provided that cover for theft of money and funds, but we're starting to see low sublimits creep in for some of those types of cover. And I think Patrick might have more to add on this point as well, being a broker.
Yeah, thanks. A couple of things there. I think pure reputational harm cover is something the insurance market has been kind of working on for a number of years, because essentially if you ask a company what's your top 3 assets, their reputation is generally up there. However, I would suggest to any of our clients, again, back to this resilience piece, the insurance policy itself is the best thing you can put in place to protect your reputation, because that's the thing that's going to allow you to bounce back to that business as usual state as quick as possible. And really, that's how you protect your reputation. If you have an issue, if you have whether it's a breach or a system's down that occurs, and you're able to remedy it, rectify it, and be back to where you were in a short period of time, well, that's going to do wonders for your reputation. Should it be something that's handled poorly and fluffed and it drags out for forever and a day, well, that's going to do your reputation no end of harm. So I think the policy itself is fantastic reputational protection. And without kind of future gazing on what may come into policies, I think there's some really good parts of the policy that are underappreciated by a lot of clients and insureds at the moment. And the one I'd pick out first and foremost is business interruption cover. So what that will cover you for, and you can get it in a manner that's extremely broad as well. So the insurance policy will pay out for your loss of profits or increased cost of working should a service provider of yours go down, meaning that your system's go down and your business can't operate, which I think is somewhat crazy, but insurers are more than happy to provide this cover. So on a worst case, if Amazon Web Services went down for a week and a half, and all the associated businesses who rely on that service went down because of that as well, essentially the insurance policies are paying out for you for your loss of profits and increased cost of working during that week and a half. Now, I think that potentially in the future will cause some issue for insurers, but at the moment they're offering the coverage, so I'd suggest to my clients quite strongly that you take it up.
Thanks, Patrick. I mean, it sounds like the insurance market as a whole is listening to, responding to, and expanding cover, having regard to the ever-changing threats of the data and the cyber landscape. From your perspective as an advisor to buyers of insurance, is there anything high on your wish list? Are there any gaps in the cover available that the insurance market is providing that you think need to be plugged?
To be honest, no. I think I think the market is quite buoyant, and I advise my clients quite confidently that the coverage that is out there at the moment is extremely broad and is written in a way that should cover any or most scenarios that face companies that buy the protection. I think we talk a lot about data breaches and whatever else, which don't apply to many of the companies we deal with. That business interruption piece is something which is applicable to essentially every company. So I think that the coverage, due to the competitiveness of the market, is in a very good place. I hope that coverage, my wish would be, I hope that coverage does stay in place. I think once we see a few claims, especially a few large ones, is really the likely thing is some of that coverage might start to be curtailed, but we're not there yet, so hopefully not anytime soon.
Sure, thank you. That's helpful. The entry into an insurance policy, whether it's a cyber policy or any other policy, is a contract like any other contract, and what that requires is a willing buyer and a willing seller. I'll pose this question to both of you. David first. I mean, what should organisations be doing when they are looking to take out cyber cover and to satisfy you and convince insurers that they are a good risk for the insurers to be issuing policies to?
Yeah, to get the best deal really is companies that impress with their cyber maturity are the ones that we prefer to partner with. We have a whole range of insureds out there at various stages of progression in terms of the maturity. Terms kind of are tailored, sometimes a bit more restrictive, or perhaps higher excesses, lower limits for those that aren't quite there yet. But those that have taken steps to go down the track, perhaps engage third-party consultants to help them with that, will, yeah, definitely from an underwriting perspective, we would favour those that can prove that they're at a certain standard. It's a difficult thing to underwrite cyber insurance. It's really, the challenge has always been to get the right information. And I think when we launched 6 years ago now, it was very difficult to get any information. Sometimes we were quoting risks based off external information, sometimes a professional indemnity proposal form that didn't really allow us to look under the bonnet and see some of the systems and procedures that were in place within a company. That we're about measuring the amount of data that a company holds, what type of data that is, and then the security and privacy protections around that data. But also there's the network resilience side and assessing what the impact could be. If there's a network outage for various time periods, what is the business impact? What controls does an organisation have in place to mitigate those type of network issues? So there's many aspects to underwriting, and it's a very fluid thing, and it depends on the size of the company, the industry the company is in. So as underwriters, there's no set template. We do have a proposal form that certainly assists us begin that process. But ideally, the risks I look at, I like to meet our clients and have discussions with key people in those organisations, and a lot of that information comes out. It's not just ticking a box in a proposal form. We can see the people are on top of issues. They've sometimes run penetration tests. We can see not necessarily the results of those penetration tests because those can be highly confidential, but to know that our proposers have a risk-based approach to addressing those issues that come out of penetration tests, you know, that impresses us too. So that's really, it's hard to encompass like in a 30-second kind of soundbite as to what we're looking for, but there is a really involved process, especially for those at the larger end of the scale. More SME risks, it's a little bit more straightforward, and we can kind of look at basic proposal forms there.
Sure, thanks, David. So I think that the key point is it's communication, transparency and disclosure. Before I flick to Patrick, I think we've got a very topical question from the floor, which we might interject with.
Well, we've actually got 2 or 3 questions which start to roll into that and actually ask further info. So related to that, is there any framework or policy within the providers to do discounting based on either organisational professional memberships to organisations like AUSCERT, or holding things like PCI compliance or actual other third-party audit compliance assessment and validation results, like a data centre doing, SAE 16 or some of the other certification proposals? That's kind of one of the major parts.
Yep. Not a problem. So, look, as has been touched on, I won't go over it too much. David talked about the top end of town, and Dean is certainly right. It's about communication. At the smaller end of town, if you're an organisation with less than, say 50 mil in revenue, I can get you a very good insurance policy based on, literally no information at all. Essentially your revenue, your employee numbers and your business name, and that's because insurers at that end of the market can't underwrite each individual small account. They assume everyone's at a pretty low standard in terms of security and everything else, and try and build a big enough pool to deal with the issues that arise. But that's right, it's about telling a story. So, many companies are investing really heavily in security and infrastructure, and if you're a CISO or you're involved in security within an organisation, if you haven't already been tapped on the shoulder, I suggest you might be dragged into the process of not just filling in a proposal form, but meeting with insurers and telling that story about the work you're doing internally. Because the proposal forms generally, to be quite frank, they're rubbish. I mean, we get pretty poor feedback from a lot of security persons who are filling them out because, you're doing quite diligent and detailed work, and you're getting asked yes/no questions, on how to kind of articulate that. So that's a problem, and we need to kind of elevate, and we do for our clients, elevate them above that proposal form if you're a medium or larger entity, and have those discussions with key personnel and the underwriters.
And just kind of responding to the question about standards, absolutely, that does have an impact on the way we assess and price risk, whether it's NIST or ISO 27001, PCI compliance. Absolutely, we look for those things. Some companies that have gone through ISO 27001, we know that audited annually. It's a arduous process sometimes if the scope is across a business, so that definitely impresses us. And I would put those types of organisations in the top quartile. Not everyone's there in Australia at the moment. Even with PCI compliance, it's amazing. Some of the big retailers, they're partly hampered by legacy systems, and they won't get the full compliance. They might be 85% of the way there, but they still may be a number of years away from achieving that. And that definitely impacts us, and that PCI fines and penalties could be imposed at any point in time if they're not compliant. So, yeah, that does impact the cover we provide as well.
Great. Excuse me. So obviously related to all of this, given you actually want your clients to be secure and you want to lower your risk of having to pay out, as part of the premiums, you're actually considering bundling services to actually help them out or provide them guidance and support to actually help them improve their current posture and ability to lower their own premiums, mitigate your risk, their risk, and obviously provide a better service for everybody?
Yeah, I don't think we're seeing that enough. So that's done on a number of other policies, but in other realms of insurance, just say you pay a premium of $100,000 a year, often an insurer will allow you to take 10% of that premium and spend it on whatever risk mitigation techniques that you may want to employ, whether it's pen testing or other external services that you can then demonstrate to the insurer that, look, we're in this together. We're improving our risk, and the insurer is happy to put some of that premium towards it, so you're working in partnership together. Unfortunately, we're probably not there with a lot of insurers yet, but that's something we hope increases over time.
Yeah. We do have a risk assessment process that we can access, and it's a third-party provider, but that third party, they're actually based in London. They have an enormous amount of data across industries. So the value in using them, the results can really be assessed to the peers for an organisation in a particular industry. So we have run these surveys, and it gives a great insight. We run them across 12 different security domains. These controls are reviewed with respect to NIST and a whole range of other standards as well. So it's something we've tailored to the risk that we're underwriting rather than being a holistic risk assessment the insured might use. But there's certainly great recommendations that come out of that process. And our insureds have, where these have been run, built those improvements into their risk management process. So it's something we do, and it's something I'm working on locally as well to beef up that capability here.
Thanks, David. We're nearly out of time. There was just one question that I wanted to pose to Matthew in closing, slightly changing tack, and that is, we've spoken a lot about the pure mandatory breach notification issues, challenges, and I guess opportunities that come out of that. But if we think about the flow-on consequences of that, Matthew, particularly for vendors, what do you think are some of the issues and the implications of the new breach notification regime for liability, IT liability for vendors?
I think IT liability has been a fairly benign market in Australia. I mean, many professionals regularly get sued. Okay, well, I'll duck in while they're doing that. I don't know, maybe I am, I don't know. But anyway, I'll press on. The bottom line, I think we'll find, is that IT suppliers are going to be more in focus in the future. They've been one of those professional groups that have escaped a lot of attention, except in some rather large cases. I think what we will see with mandatory notification is more litigation brought against organisations that have been breached, but also a greater focus within those organisations of their cybersecurity and their reliance upon external vendors. And I think they're going to become more keen on recovering against those vendors for the losses they've suffered. I think we can expect, and I mean, David can probably speak to this more accurately than I can, but I would anticipate that insurers who have paid out under cyber policies, particularly those first-party losses that can be really quite significant in notification of notifications to people whose data has been lost. The price associated with that can be far more significant than you might expect. I would anticipate they'll be looking to recover those losses against the third parties who were potentially responsible for either inadequate protection, inadequate patching. You know, there's a whole range of potential litigation exposures that could arise.
Thanks, Matthew. We'll wrap up there. If anyone does have any burning questions, then we'll be outside, so please come and collar us. But if you join me in thanking the panel. Thank you, gents.